James Blacklaw's JB Commercial Finance here. We're now in the middle of September. Summer is behind us, the kids are back at school, and all the focus, according to a lot of people I bump into, is on Christmas. Now, Christmas is a long way away for a lot of us. A lot of people have got plans with regard to finances, with regard to purchases, with regard to growing their business, or even their business surviving up to that period. So I want to give a brief kind of state of the nation with regard to commercial lending at this moment in time. I've done a few of these in the past, and I find they're quite useful to get a little bit of traction because people know what to and what not to look for with regard to applying for finance. So the main high street banks, always sort of first starting point for this kind of video. They continue to contract, their service continues to be a little bit erratic, their high street presence, to face-to-face managers coming to face-to-face with their clients is dropping. So if you're a big business locally with several dozen employees, you've probably still got a face-to-face manager, and you probably still haven't noticed a dip in service. If you're at the micro business level, you probably have noticed that. You're probably getting shipped off to an 0800 number, and that isn't going to change, I'm afraid. Certainly not until there's a major rethink in the way that banks look at their profitability and they look at the way they service their business customers. So don't expect any improvement in service or an appetite from the high street banks, albeit a couple of them have sent me circulars recently showing that in certain sectors they're developing more of an appetite, noticeably care homes and the white coat sector. So those sectors seem to be quite strong, as with certain lenders is manufacturing. So if you make things, come and talk to me if now is a time for borrowing money. The peer-to-peer market, some of you noticed a post I did very recently on various social media platforms saying that JB Commercial Finance is now a preferred partner of the Funding Circle, who remain by a comfortable distance the largest peer-to-peer lender in the UK. They've had a massive advertising campaign over the last month. They're all over television, all over the radio. I keep getting pop-ups on the computer. You can actually borrow more potentially if you come to a preferred partner like myself than you could if you applied yourself or went to another broker. And there's certain things we can do with regard to getting things accepted. Having an experienced hand looking at it can often help that process. So even if you're tempted to apply for a Funding Circle loan yourself, it won't cost you any more to come and do it via someone like myself. Or if it does cost you more, it's a very, very small amount. And your chances of getting it approved, I would suggest, slightly higher because you had a second set of eyes looking at the application process. So they're really aggressive, they're really good, and there's lots of alternatives out there. Now, there's not as many as there were, but there's still a buoyant market in smaller unsecured loans. So the market's good, but it is very, very much driven by one major player at this moment in time, and that is the Funding Circle. But I do have an excellent relationship with them. I do pass them a lot of business. So it's been great, really, really good. The bridging and development finance marketplace remains very steady. There's still an awful lot of lenders out there. There's a lot of crooks out there, to be perfectly honest. But every lender I deal with, and most brokers deal with, does get vetted by our finance and by our sales directors, and everyone is FCA authorised and regulated. So there are no real risks involved when dealing with these lenders if it's via an authorised broker. The market's very steady with regard to how much you can borrow. It's generally around about the sort of 65-70% mark, depending on the property, depending on the quality of the proposition. So that's not going to change a huge amount. There are certain lenders that go slightly higher, a lot of them depending on what the property is, i.e. is that a public house or a restaurant, that can be quite a lot lower. But they're the sort of rates for the development and bridging market. And the alternative commercial mortgage market, so outside the high street banks, how is that looking? Well, I mean, at the start of this year, that was a real growth sector. Several lenders out there very aggressive in the marketplace. Unfortunately, for many of them, service seems to have fallen off the edge of a cliff. And it's very, very hard now to even get a decision, let alone deals through a lot of these lenders. I'm not going to name them, that would be unprofessional. But a lot of the bigger players who are still very active out there, it can take you 2, 3, even 4 weeks to even get a decision, let alone get any money out the door. So again, it's increasingly important to come and talk to someone like myself, and we can have a conversation with you about what's more important, price or time, because often you can't have both. So, in a nutshell, the economy is still reasonably robust, things are okay. Obviously everyone's holding their breath around about the results of Brexit talks and the votes that are coming up, and obviously, you know, in a few months' time we're going to be out of the EU and the impact that's going to have. In the meantime, things are okay, things are steady. It's still a very, very good time to be borrowing money, especially if you're a profitable business looking to grow and you want some money quickly. Great time to come and talk to me. I hope this has been useful for you. It is September. I'll do another one of these in a couple of months' time. I'm James Blackwells. Please like, share and subscribe to these videos. It means the world to me. And I'll see you next time.